speaking. I see you guys have already been listening to it, so let's get into it.
He's more expensive than Justin Trudeau by every objective measure. The debt and the spending is more expensive today.
The Honourable Member for Jonquière. Thank you very much, Madam Speaker. I would like to congratulate the Leader of the Official Opposition for his speech. I hope that this will impress his troops because we want to keep the government in a minority position. In the budget, there is a great deal of investment in fossil fuels. There is a backpedaling on the energy transition. There is an extremely high investment in defense. And as my colleague from Mirabel said, it's so much a conservative budget that there's a conservative member who crossed the floor. So I would like to ask the Leader of the Official Opposition whether or not he's jealous of the budget that was tabled. The Honourable Member of the Opposition. I have to admit, Madam Speaker, that I'm not jealous at all. I'm a bit depressed to see how huge the Liberal deficit is. When the Conservatives were in power, yes, there were short-term deficits, but we managed to balance the budget a few years after, once the crisis in the United States ended. We managed to balance the budget and leave the country in the best financial state of all G7 countries, and that's what we'll do next time. We will use an approach that balances budgets, cuts waste, and cuts taxes for those who work hard, and I hope that the Bloc Québécois will support that idea.
The Honourable Member for Saint Colfax.
Thank you, Madam Speaker. It's so rare to have the opportunity that the Leader of the Official Opposition gives a sufficiently long speech that the questions get around to me. So I want to thank him for that from the bottom of my heart. And I do want to say that I'll probably be voting the same way that he will on this budget, unless changes are made. But I wanted to ask a question because I know he's a reader and thinks about issues, and I'm fascinated by the fact that this Prime Minister appears to be taking his main policy advice from a book called Abundance. I'm sure he's heard of it, big bestseller by Ezra Klein, New York Times columnist. And his thesis, the entire book Abundance, comes to this, which sounds like a conservative speech in Canada, but for one thing, the whole book is about the United States. So the basic.
Okay, I'll come back to this later. The committee's already started, so we'll get into committee.
Economy. And in this context, we have supported the economy through this period of adjustment. We have lowered our policy interest rate by 100 basis points since the start of the year. And finally, the weakness we're seeing in the Canadian economy is more than a cyclical downturn. It's also a structural transition. U.S. trade restrictions have diminished Canada's economic prospects. The structural damage caused by tariffs is reducing our productive capacity and adding costs. This limits the ability of monetary policy to boost demand while maintaining low inflation. So let me turn now to economic conditions. While U.S. trade policy remains unpredictable, its impacts are becoming clear. Le PIB du Canada s'est contracté de 1,6%.
Canada's GDP contracted 1.6% in the second quarter as tariffs and uncertainty reduced exports and business investment. U.S. trade actions are having severe effects on targeted sectors, including auto, steel, aluminum, and lumber. Household spending has been resilient in the second quarter, with strong consumer spending and a pickup in residential investment. The labour market is soft. Employment gains in September followed 2 months of sizable losses. Job losses have been concentrated in trade-sensitive sectors, and hiring has been weak across the economy. The unemployment rate remained at 7.1% in September, and wage growth has slowed down. In the second half of this year, GDP growth is expected to pick up, but shall remain weak, averaging about 0.75%. It should then pick up on a quarterly basis in 2026 as exports and investment recover, and should average about 1.5% by 2027. This implies that excess supply is only taken up gradually. CPI inflation came in at 2.4% in September, slightly higher than the bank had anticipated. The bank's preferred measures of core inflation have been sticky around 3%, but upward momentum has dissipated.
That's some good ammo right there.
Looking at a broader range of indicators, underlying inflation looks to be around 2.5%. The bank expects inflationary pressures to ease in the months ahead, and CPI inflation should remain near 2% over the projection horizon.
Roughly in line with our outlook, the Governing Council sees the current policy rate at about the right level to keep inflation close to 2% while helping the economy through this period of structural adjustment. We will be assessing incoming data carefully relative to the bank's outlook, and if the outlook changes, we are prepared to respond. For many months, we have been stressing that monetary policy cannot undo the damage caused by tariffs. Trade friction means our economy will work less efficiently with higher costs and less income. Even as economic growth recovers, the entire path for GDP is lower than it was before the swerve in U.S. trade policy. Monetary policy can help the economy adjust as long as inflation is well controlled, but it cannot restore the economy to its pre-tariff path. But I will add, there are things the country can do to get on a higher path. We don't need to accept a lower standard of living. Our focus at the Bank of Canada is ensuring Canadians can continue to have confidence in price stability through this period of global upheaval. And with that, I'd be very pleased to take your questions.
Great. Thank you so much, Mr. Macklem. With that, we will begin with Mr. Halan for 6 minutes from the Conservative.
Thank you, Chair. Governor, Deputy Governor, thank you for being here. Governor, the bank recently updated its outlook for GDP. It's below 2% now for economic growth. As we've seen, the Prime Minister promised to have the fastest growing economy in the G7. But given this new adjustment that the bank made, do you think the other G7 countries will outpace Canada in economic growth?
Yes.
Well, certainly I would agree. Our forecast is for very modest growth. Second half of this year, averaging only 0.75%. We do expect it to pick up, but as I indicated in my remarks, this is a structural adjustment, and so that's going to take some time. So yes, I don't have all the G7 forecasts in front of me, but we're not going to be the fastest growing economy in the G7 over the next year.
I would agree with you. Also, Deputy Governor Rogers, you made over a year ago. You made this. You basically alerted everyone here. It was a break glass emergency when it came to our productivity. We've seen around $54 billion in foreign investment leave Canada. Businesses are shutting doors. We see it in some of our ridings. We get those emails from constituents. And at a time when Trump is coming for our jobs, has the government done enough, do you think, to reverse this break glass emergency, or have things gotten worse since you said that?
Well, the speech you're talking about I gave in 2024, so it predated the swerve to protectionism by our U.S. trading partner, our biggest trading partner. So I guess the simplest way to put it is if we had some urgency to fixing our productivity in 2024, we certainly have it now. Like you, we're digesting all of the measures in the budget. We generally agree with the diagnosis that our country's in need of some productive investments. So, on the whole, we think a budget that invests in improving our country's productivity is a good budget. As for the specific measures, those are for you and your colleagues to assess.
In your opinion, though, do you think that we were ready for this tariff war? Would we have been in a better position if we were better prepared?
Well, I think that was one of the points in this speech, is that an economy, that an improvement in our productivity would help buffer our economy from a variety of shocks, and one of them would be a trade shock.
Right. Thank you. Governor, last week you said in your press conference, and I'm just quoting you, what's most concerning is that unless we change things, our standard of living as a country is going to be lower than it otherwise would have been. I'm not sure if you've seen in the budget or not, but in the budget that was released yesterday by the Liberals, they have a line in here that says, if Canada's productivity growth had matched the U.S. from 27 to 2023, the median income of a family with one child would be nearly $11,000 higher. Would you agree with this assessment from the budget?
Well, I can't speak to every number in the budget, but look, broadly speaking, yes, if we'd had U.S. productivity growth, the standard of living of Canadians would be much higher than it is today.
Right. And what do you think are the domestic factors that made you say that are impacting Canadian standard of living today?
Well, what made me say? I mean, there's really two issues here. I mean, we've had a long-standing productivity issue. That's why Senior Deputy Governor sounded the alarm. At that point, we kind of got through COVID. We got inflation down. It was time to get back to some of the longer-term issues, and that one was front and center. A lot has changed in a year, and last week when I said our standard of living was lower, I was really referring to the fact that U.S. tariffs have fundamentally fractured our trade relationship with our biggest trading partner, and unless we do something, that is a big negative structural shock to the Canadian economy. It's going to destroy some capacity. It's going to raise costs. Monetary policy can help smooth that adjustment, but it can't undo the effects of tariffs. But there are if we don't do something about it, our standard of living will be in Canada will be on a permanently lower path. As I intimated in my opening remarks, there are things we can do about it in the country. We need to improve our competitiveness. We need to improve our productivity. We need more investment. Those are the kind of positive structural reforms that could bend the path back up.
When we put this into perspective of an average everyday Canadian, we're seeing today that Canadians are not doing well. We can all agree on that, I believe. Last time, one of your previous visits here, we talked about food bank usage. And food bank usage has doubled since 2019, and more Canadians are visiting a food bank. Can you put that into perspective of how the productivity crisis that we're in right now, when you say standard of living, how does that impact Canadians?
A very brief response, please.
Yeah, it's actually a very important question. We're hearing what you're hearing. Canadians' biggest concern is the cost of living. You ask economists what's the biggest problem, they'll say it's productivity. It's actually, it's the same thing. And why do I say that? I mean, how are we going to make things more affordable? The way to make things more affordable is we've got to have more income.
Sorry,
to get
Governor,
more income,
I'm gonna have
we
to
need more productivity. If we have more income, everything's more affordable.
I'm going to have to move on to the next questioner. Thank you, Mr.
Right,
Halan.
give him some time to answer
Mr.
that.
For 6 minutes.
That's a good
Merci,
question.
Madame la Présidente. Alors,
Thank you, Madam Chair, Mr. Macklem, Madam Rogers. Thank you for being here today.
Okay, so I never interrupt somebody, but it's a Liberal round, and I just wanted to make some comments on that because I think MP Halan was really in a good track of his line of questioning. I would have liked to see a little bit more narrowed down on the growth section, but they were getting right on the topic, is that productivity is so low and that a growth rate, GDP growth rate of not even 1%, 0.75% for this year, and he expects it to be. He hopes it will be next year a bit better, but he expects it to be relatively around the same. I mean, that's just horrible. We've had no growth over the last 10 years, and what the growth we're having is less than 1%.
5%. We're not going to lower the price level. To lower the entire price level would have a very negative effect on the Canadian economy. You'd have to have a big recession. Nobody wants that. So the question is, how do you make things more affordable? Well, you have to grow the top line. We need to, if there's more income, then things are more affordable. So then how do you get more income? Well, you need to be more competitive. You need to be more productive. You need to, businesses need to sell more products. They need to create more jobs. Productivity is what pays higher wages. Those things will, increase incomes and make things more affordable. So, to get back to where, economists call it productivity, Canadians call it cost of living, it's the same thing.
Thank you, Governor. Yes, indeed, and that's an important distinction that one has to make between inflation and which is the change in prices, and the cost of living, which is the level of prices. And as you pointed out, nobody really should be hoping for a drop in prices. If prices decline, generally speaking, that's called deflation, and that's not good. That's not good at all. So the way to improve affordability, to improve the standard of living, is to raise incomes. You raise incomes through greater productivity, so businesses can pay higher salaries. You also mentioned that we are facing a structural adjustment. It's not just a cyclical change, but a structural adjustment brought about by the trade shock, by the unpredictable and unjustified tariffs imposed by the U.S. administration. Perhaps if you could just tell us and take the time that you want, generally speaking, why in 2025, why tariffs are a bad idea?
Yeah, well, look, Canada, in fact, the world, has benefited tremendously by lowering tariffs. You go back to the end of the Second World War, basically since then globally, tariffs, until the last few years, tariffs have been coming down. Trade has been growing actually faster than GDP, and that's been an engine of growth in the economy. And how does that work? Well, it allows each country, each business to specialize in what they do best, and then buy from other countries what other countries do best. You get more economies of scale. There's pretty clear evidence you also get more innovation when you have more trade. Innovation, spurs productivity growth, raises standards of living. The U.S. under President Trump has swerved dramatically towards protectionism. That's raising costs. That's going to actually hurt both our countries, and it's hurting. It's going to weaken growth in countries around the world. But Canada is disproportionately affected. Canada, we are a very open economy. 75% of our trade is with one country, the United States. And, to get back to a previous question, we've talked for a long time about diversifying our trade, but we haven't made much progress. I think, now it's pretty clear that we've got to get a lot more serious about that. But yes, tariffs, from a Canadian perspective, tariffs, they're going to just, right now we have actually very steep tariffs on steel, aluminum, autos, trade restrictions on lumber. The overall tariff rate for Canada is actually still relatively low compared to other countries, about 6%, one of the lowest in the world. But our economy is just so much more integrated with the United States than other countries. So we are being very much affected. And as I said, if we don't do something about it, our economy is going to grow. It's going to get back to growth, but it's going to be growing along a lower trajectory.
That's right. And that obviously has an impact on the labor market. But in your recent projection in the monetary policy report, the forecast for Canada, and which is broadly in line with other forecasts, we have the domestic side of the economy doing, I wouldn't say well, but reasonably well, consumption, domestic demand is relatively robust. The weakness is on the external side, on trade, on
also, yeah, I would agree. Consumption has been
Just a
holding up
brief
pretty
response.
well. We think there'll be some resilience. Exports very weak, but also business investment very weak.
Thank you, Mr. Létard. C'est le temps.
I shall-
On va continuer avec...
Thank you. We will now continue with Mr. Garand for 6 minutes. Thank you, Madam Chair. Mr. Governor, Senior Deputy Governor, thank you for being here. When we look at the macroeconomic analysis in your report on monetary policy, we can see that there is a drop-off in growth, and we've got high unemployment, a lack of investment, and productivity is broken down. It seems that things are not going well at all, apart from household spending, which seems to be allowing the economy to keep its head above water. So I wonder, when everything's going badly, when we have less jobs and we're less productive, and that the real driving force is household spending, and we've got high levels of indebtedness, should we worry about an acceleration in household indebtedness, or should we be concerned about possible risks that we could see in the quarters or the years to come? In terms of consumption, as you've said, up until now, consumption has remained quite resilient, quite strong, and also the housing market. We can see a bit more growth there too. The other thing that we're observing is that the indebtedness of households is quite high, but it has gone down, and savings levels have been quite high. So households have the capacity, with a slightly higher savings level, to continue to spend. Now, as you've suggested, we do think that with an unemployment rate at 7.1% and with the uncertainty out there, probably the consumption growth rate will drop off, but we think it will remain positive. In the short term, we've got growth in the economy. It's weak because exports and investments are on a downward trend, and consumption and government spending is positive. And we think that next year there should be an uptick in exports and investments, so GDP growth should go up.
Should, but it won't.
But it's not going to go up very quickly. So yes, there are some inherent risks. If the structural adjustment is more difficult than we think, or if the US imposes more tariffs on us, then the economy could be even weaker. And that means that there will be less consumption. Well, you're anticipating my second question there, Governor, because we know that there's going to be the CUSMA review next year, but we're faced with a US administration that's difficult to predict, to anticipate, and respect for institutions is not the type of respect that we're seeing, the respect for the rule of law. I don't need to sing the whole song to you there. So we can see that there's been a dip in growth, and we hope that growth is going to come back up again, but not such a strong level. What do you think about the CUSMA review? Because in terms of the government, it seems that it's taking time to get an agreement. I don't want to judge this, but we're counting on the fact that CUSMA is a kind of guarantee that will always be there for us. So what is the role that's been given to complete renewal of CUSMA in your assumptions? Well, the underlying assumptions are that the US tariffs that are in place now remain there on a permanent basis, and our agreement remains as is, and the high tariffs on aluminum, steel, lumber, and the autos would remain. I'm going to interrupt you here because, of course, time is ticking. But if we look at the last report on the monetary policy and the most recent ones, each time it seemed that often there was this assumption that if the tariffs that we've got today continue, there have been various scenarios as to what would happen. Now it seems, and you've given us the timeline here, it seems that the assumption didn't actually come to pass. There were other tariffs that were imposed instead. So do we think this is a realistic assumption that these forecasts will actually come to pass? That's why we come up with different scenarios is the answer. What are the Americans going to do? It's not predictable. They've shown that they can change their ideas very quickly, so it's not predictable, and I can't predict any better than you. So given that situation, that's why we use various scenarios, various hypotheses. So if you look at our July monetary policy report, there were 3 scenarios. There was one scenario where we remain with the tariffs that are already in place, and then there was a scenario where we actually increase tariffs. Now, you've taken the decision to not do this. We're taking these tariffs as if they're fixed tariffs, and we consider that there would be more certainty then. No, we haven't done that yet. But we have these scenarios that haven't changed much in the meantime since July, so we're still referring back to these. Now, why have we... Thank you, Mr. Macklem. Thank you very much, Mr. Garand. That's the end of this block, and then we'll continue afterwards with Ms. Kobina, please, from the Conservatives.
Sure. Mr. Macklem, in your most recent monetary policy report, I'm going to quote a section there. It says, weak growth is likely in the second half of 2025. After contracting in the second quarter, GDP growth is estimated to be about 0.75% on average for the second half of the year. So when we look at it on a year-to-date basis, is it fair to say that performance is basically neutral for our economy? But of course, the Prime Minister is promising Canadians that he's going to be building the economy at unimaginable speeds not seen since the Second World War. So I did a bit of research, and it looks like Canada's GDP growth following the years of the Second World War were between 6 and 7%. So based on your forecasts, when do you expect that we would achieve that 67% GDP growth?
Good question.
Well, our forecast goes out about 2 to 3 years, and we don't achieve that. We've got, I think, 1.2, 1.1, and 1.6 in 2027.
And what do you think the economy would need to achieve that 6 and 7% GDP growth?
Well, if we want much higher, growth in the economy, we're going to need much higher productivity growth.
Okay. So when I read the news, I see that auto manufacturers have relocated investment to the U.S., some big names recently. Housing starts in Toronto specifically are a 30-year low. Bottling companies are also moving operations to the U.S. And, of course, small businesses have been heavily impacted because of the U.S. tariffs. Given that, do you believe that our economy is growing at unimaginable speeds, like the Prime Minister has mentioned?
At a what speed?
Unimaginable.
Unimaginable. Well, I'm not really going to put it on.
Decades.
I mean, you can decide on the adjective. I mean, our forecast is 1.1, 1.2, 1.6.
So, in simple terms, for Canadians watching, that means that our economy is not growing very fast.
No.
Is that fair to say?
No, our economy is not growing very fast. It's been hit with a major structural shock. As you indicated, growth in the second quarter was negative. Economy contracted 1.6%. That was largely as a result of a big drop in exports to the United States. We think growth in the second half of the year, which, we're in November now, so that a lot of that's already happened, but we don't have all the data yet. We think it's going to be pretty modest, 0.5 for Q3, 1% for Q4. And that's really because, to get back to Mr. Garon's question, consumption growth holding up, that's supporting growth, but exports and business investment remain weak. As you get into next year, we think there'll be some recovery in exports and business investment, so growth picks up. But yes, even 2027, 1.6% growth is not particularly strong.
And so you did touch on my next question a little bit. So your report mentions the GDP downgrade reflects lost capacity in a productivity crisis, not a surge of growth. When I think of lost productivity, that's not something that is easily restored, of course, because oftentimes when I think of a business that's heavily or capital intensive, once they've moved operations to another country, very unlikely that they will actually return, predominantly in manufacturing. So how does the lost capacity and productivity crisis impact the overall growth of the economy?
Well, really, my point in highlighting that this isn't a typical cyclical, it's not a typical business cycle, it's a structural adjustment. Part of the message there is that it's going to take longer than normal because rather than sort of demand coming back and businesses have found unused capacity, they now put that, they bring workers back to work, they increase production, and everything bounces back. This, in a structural adjustment, sectors need to pivot. They need to invest in new things. They're going to be doing less of some things. They need to be doing more of other things. And that is going to take time. So that's an important reason why the pickup in the economy is relatively gradual.
Thank you, Ms. Kobina.
I'd love to ask some questions right now.
We'll continue with Mr. McDonald for 5 minutes, please.
Thank you, Madam Chair, and thank you to the
loud.
Governor and the Deputy Governor for attending today. Governor, yesterday we introduced a budget to invest in Canadians, and we're doing this because of the storm we're in. We're investing $1 trillion. Do you think that's going to improve productivity and the standard of living for Canadians over the next few years?
Well, actually, the Senior Deputy Governor touched on this. When I haven't read every page on the budget, but I certainly have looked at it. And the way I would put it is, I think we would largely share the diagnosis of the issues that the budget identifies. But we've had weak business investment in this country for many years. The impact of tariffs, and particularly the impact of the unpredictability of U.S. policy, the upcoming review of CUSMA, those things are all weighing on investment, so investment's even weaker. This country needs more investment to improve productivity, open new markets, grow our internal market, and that involves both public investment, but also importantly, catalyzing private investment.
Yes, private investment.
To do a better job of attracting, we need to keep more of the capital. We need more investment by Canadian businesses in Canada, and we need to do a better job of attracting foreign capital. Now, so look, I think we see the same diagnostic. There are a number of measures in the budget, on the tax side, on the spending side. It's not really up to us to opine on the specific measures in the budget. I will say fiscal policy can do some important things that monetary policy can't do. Fiscal policy can target specific sectors in a way monetary policy can't. We have a number of sectors that have been very hard hit. Fiscal policy can support them directly, and fiscal policy can use the tax system and the spending system to spur investment. I think as what's going to be important in sort of moving forward is the quality of those investments, the quality of that spending, and the execution, timely execution, sound execution. That's not the responsibility of the Bank of Canada, but it is the responsibility of parliamentarians.
Thank you. Now, further to that, we'll talk about monetary policy that you gave a report last week. The overnight rate dropped another 25 basis points. I come from the business world, and every time interest rates go down, that's an incentive to invest in technology, in improvements in your operation. Do you think, and you commented earlier that you feel there'll be a stable rate going into 2026, maybe no more changes over that year, I think, in your monetary policy report. Is that going to give investors confidence to have a stable environment on interest rates?
Look, I mean, interest rates are, our policy rates at 2.25. If you look at the, you look at the 10-year Government of Canada rate, which is the sort of the benchmark that loans to companies are priced off. It's at 3.25. So, interest rates, they're not super low, but they're certainly at the short end. We think we're at the lower end of what we call neutral. So it is providing some stimulus. And yes, I think there is a role for monetary policy to play in helping with this structural adjustment. Lowering interest rates to lower the cost of investment is part of that. But as we stressed in the monetary policy report, unfortunately, structural adjustment also brings new costs. Tariffs bring new costs. So we are limited in how much we can use interest rates to do that. And what we indicated in our report is, and I will emphasize this, conditional on the forecast that we laid out. Yes, we think the current interest rate is about right to balance those two things.
You have about 20 seconds left in this round.
I would just stress the thing that we think about in terms of contributing to confidence for investment is keeping inflation stable. So interest rates are how we do that. But I think what businesses need from us, from the Bank of Canada, number one, is to be confident the prices are going to stay stable. So.
Okay, thank you, Mr. McDonald. Monsieur Garon, pour 2 minutes et demie.
Mr. Garon, 2.5 minutes.
I'd love to ask a
Madam
couple
Chair.
questions right now.
We've got a government who's found it difficult or has been unable to reach the sign of an agreement with the US, as other countries have been able to do. And they've said, when we cannot do this, it's not a problem because we've got lower tariff rates than our trade partners. Then the day after, the government says, well, we're extremely exposed to the US because of our imports and exports that are a big part of our GDP, so it's urgent to diversify our partners. So we don't know which version is the right one now. So if we look at page 31 of the report, when you say that the average tariff rate is 5.9%. I've got the impression that perhaps that's not the right measure of our vulnerability. So I'd like to know, given the tariffs in the impacted sectors and our volume of trade with US compared to our main trade partners, are we more or less exposed to this crisis given the current context? I agree. I think that both of the things that you've mentioned are true. Canada has a tariff rate. The US tariff rates against Canada are at around 6% on average. The reality is that there's very high tariff rates on certain sectors, and then for the rest of the economy, there's almost no tariffs applied. I've just got a minute left, so my question here is, are we more exposed in a net position compared to our trading partners, our main trading partners? Just let me finish for a moment. The average tariff rate is one of the lowest in the world, but our economy is far more integrated with the US than all the other economies in the world. So yes, we are more exposed. And if you look at the impact of the US tariffs, Canada is far more impacted compared to several other economies. So when we say it's not urgent to get an agreement, it's not because we've got pretty low tariff rates. then perhaps voluntarily or involuntarily, that can mislead people when the public hears this. I agree. It's very important for the Canadian economy to have less of these tariffs.
Please.
Thank you. Governor, in response to one of my colleagues' questions, you said if we don't do something about productivity, we're on a, I think you said, structural path to a lower standard, ever lower standards of living. So if in the standard of living of Canadians is what's at stake in the productivity crisis that was a break glass emergency even before the tariff war began. What are some of the things that we need to do something about it? Would repeal of excessive regulation be on the list of things that must be done to solve the productivity crisis?
Yeah, actually, I'm just going to clarify one thing I said and ask Senior Deputy to respond, since she's been leading the charge on productivity. Just to be clear on what I said about the standard of living, I didn't say that the standard of living is going to be ever lower. The standard of living, the economy is going to get back to growth. Our standard of living is going to the standard of living in Canadians is going to improve. But without tariffs, it was up here. Unfortunately, we're now on a lower path. And in the monetary policy report, our estimate is that path is about 1.5% lower. That's material. But let me ask the Senior Deputy Governor to talk about some of the things we could do to bend that lower curve back up to the higher.
Okay, because it was the Deputy Governor's concern and called it a break glass emergency before the tariff war began. Yeah. Go ahead.
Yeah. So in terms of what could we do, the point that you made is a good one. We could look at our regulatory environment. You want to be careful when you remove regulations. Usually they're there for a reason, but certainly they can always be reviewed and made efficient. I think if I was going to focus on regulation in Canada, one of the things I think we could do is look at where regulations differ across provinces for unclear reasons. So certainly standardizing regulation, making it easier to comply with the regulation, that would be one step. Steps to encourage investment, as the Governor mentioned earlier, whether those are in tax rules or just generally making the country more investable.
In the report that you had delivered, you did single out, actually you spoke about energy and aerospace were two industries you mentioned that are high productivity industries, and oil and gas is one where we've seen a flight of capital and a lack of investment, a lack of pipeline capacity. Would building pipelines add to the productivity of our economy by enabling us to have the means to transmit that resource?
Investments that get our resources to market in general will add to productivity.
Okay, pipelines, ports, even other transportation infrastructure.
Yes.
Okay, so the government has as much as admitted that their regulatory environment is what is preventing these things from being built. That was why they brought in C5 to get over their own regulations that they brought in. So regulations, is that maybe at the core of why we cannot attract investment to high productivity industries like the oil and gas industry?
I think it's a factor.
Okay, thank you. On interest rates, Governor, you said CPI at 2.4%, core inflation at 3%. These numbers are getting into the higher end of your bound, and yet the bank has dropped interest rates. So if you're at the higher end of the bound but dropping interest rates, is that out of concern for the productivity concerns and the economic prospects rather than? Well, I'll let you.
Well, you're right. I mean, our target is for total CPI inflation. Total CPI inflation has been pretty close to 2. It did go up a bit in September to 2.4. But you're right. Our preferred measures of core are about 3. When we look at a broad range of inflation indicators, we think sort of underlying inflation is about 2.5. So yes, that is a bit of a concern. Our concern level, though, has been coming down. If you look at if you look at 3-month rates of core inflation, so a little more timely than looking at the year over year, what you see is in the first quarter they were running about 3.5. They're now under 3. So some of that upward pressure we saw on underlying inflation is dissipating. We do need to see it come down further, and that is built into our forecast that we published. So, if that doesn't happen, if instead of core inflation, we have core inflation kind of coming down to total around 2, but if inflation actually was to move up to 3% where our core is, we would be off our forecast. That would get our attention. That's the sort of thing we would respond to.
I'm going to have to end it here. Thank you, Mr. Kelly. We'll go to Mr. Turnbull for 5 minutes, please.
Great. Thanks to both of you for being here. It's a great conversation and always good when you attend this committee. So appreciate your time and your thoughtful answers and your expertise. Obviously, Governor, your outlook that was recently done doesn't take into account the federal budget and all the fiscal measures that are contained within the 495-ish pages, which I understand you might not have had a chance to fully absorb yet. But can you just confirm that it couldn't possibly have taken those things into consideration?
No, it does not take into consideration the new information in the budget. It does take into consideration things that were announced both at the federal and the provincial level before the budget. So some measures were already announced, but no, it doesn't take those into account. We will be reading the budget very carefully, and we will build in those fiscal plans into our next forecast, which will come out in January.
Wonderful. That's great. And in terms of the causes of low productivity, so perhaps to Ms. Rogers, who I know has done quite a lot of work on this. I mean, both of you have, and you've rung the alarm bell, as we've heard, and took note of that. What are the causes, Senior Deputy Governor?
Well, there's a range. There's more than one. I think I started the list in answer to Mr. Kelly's previous question, but the Governor talked about low levels of investment. So when businesses don't invest either in equipment or in training or in intellectual property, that affects productivity. Skills matching, the labor market, making sure that we're turning out the skills that we need from our secondary institutions. When we bring labor into the country through immigration programs, making sure that that's a match to the jobs we need. That's one thing. Using technology.
Okay, I hate to interrupt him, but I just want to make a point here because I think there's two things that nobody on this committee has asked, and I would even like to see the Conservatives ask about this, is when you're forecasting on inflation, there's one thing when you're talking about respect to the Canadian and U.S. dollar trade. Typically, you don't want the dollar at parity with the U.S. because you do want it to be more appealing for companies to come to Canada because it costs them 20 points cheaper or so to manufacture here. It actually helps manufacturing if we're not at parity with the U.S. Now, the problem is that it's gotten down below that threshold. You usually want to keep the threshold around 0.8, but right now it's at 0.71. So I would like someone to ask him how he feels that would help productivity if it got back to its stable rate of 0.8, 0.85, and what fiscal procedures could be done from a government standpoint in order to make that back to where it should be, and does he think that that's going to change in the next year?
Tax credits for offsetting the cost of R&D, so again supporting innovation. So do you think those things would help to increase investment and encourage businesses to take risks? Governor?
I mean, we're not gonna comment on specific tax provisions, but look, generally, yes. If you lower the costs of investment, you would expect to see more investment. And as I said, we have a pretty similar diagnosis, and I think the specific measures are really in the hands of elected governments, as they should be.
Yeah, well, I mean, I think the budget is very specific about trying to address the productivity lags that you've diagnosed in previous comments that have been made. I'm just trying to demonstrate here that there are specific measures that target each one, I think, of the causes that you've outlined in your previous remarks. So it'll be interesting to see in your next outlook how these measures are reflected, but I think there's an effort here on behalf of the current government to address productivity gaps, which I think we can all agree is a good thing.
It's a good thing.
So internal trade barriers as well, I suppose you've sort of mentioned some of those, that friction, whether it's in the labor market or whether it's just in terms of regulations not matching up, that those efforts would obviously improve productivity as well.
Thank you, Mr. Turnbull.
Deputy
That's time.
Oh, wow.
So we're going to turn to Mr. Chambers, who's joining us at the committee today for 5 minutes.
Thank you, Madam Chair. It's a pleasure to be back here. Governor, Senior Deputy Governor, thank you. You've made a number of warnings over the last few years. So I think about, you warned about inflation, you warned about immigration, you warned about productivity, a very keynote speech, but you also made a warning in the spring about financial speculators purchasing government debt, about 40% if I recall correctly. And I guess the question I have is, in a world where we are very interconnected and the possibility exists of a sovereign debt issue somewhere else in the world, maybe not in Canada, are we not more exposed than we would be because we have 40% of, we'll call them hedge funds, purchasing our debt, which rely on this kind of liquidity and repo market to make the system work? And I think that was the conclusion of the report, that that's a rising risk. Is that fair?
Yes, it is a vulnerability which we've highlighted. It's certainly not unique to Canada. One thing you have seen, actually in most major economies, is there's been generally a rise in sovereign debts globally. There's also been a shift in the investor base. And as you mentioned, hedge funds have come in to the government debt market in a bigger way. And look, to some extent, that's welcome. Governments need investors. They've been an important new investor class. But what is concerning about it is they invest with a lot of leverage. So what they do effectively is they use these arbitrage strategies that have fairly low returns. To juice those returns, they borrow a lot to increase the return. And
so I want to jump in right there because I have very limited time. If something happens and those investors leave the market, what would happen to bond yields, government bond yields in Canada?
As you suggest, if that funding was disturbed, a lot of it is very short term. If that funding was disturbed, they pulled back sharply. Yes, that would cause a disruption in government bond markets. That is very core to the financial system. That could certainly spill over
so
to
that
broader
would be
issues.
Increased bond yields, correct?
Potentially. Yes.
Potentially. So is it prudent for a government, knowing that this risk exists, to borrow record amounts of debt to go to the bond markets year after year, knowing that this risk is rising?
Look, I mean, as I said, this shift in the investor base is something you're seeing in all countries. You can. I'll let you decide.
I'll just ask another question and put a different way. If a government borrowed less money in the bond markets, would that be less risk to the government? Okay.
Thank you.
I also want to ask about term structure. We're told the government's making generational long-term investments. The term structure of government debt is some of the lowest in the G7. Let's set aside the U.S. Mexico is an 18 average year. Heck, the government of Ontario is 12. The federal government's 6.9 years. Shouldn't they be actually matching borrowing with their investments if that's actually what they're doing?
Okay, well, now you're really getting into some pretty complicated. So debt strategy. So there's a few different things. So obviously, on average, at the shorter end, it's less costly. So you want some at the shorter end. The longer end is more stable. So you want some at the longer end. The other thing is.
But I guess I'm just asking, like, we have a low term structure. Like, shouldn't the government be borrowing more long term?
I mean, the government determines the term structure that balances these various things. We are the agent for the government.
I understand you won't want to answer. That's okay. I have one final question. I understand the bank may be close to not losing money anymore, but do you wish you still had some gold reserves to offset those losses? Because we do not have any gold reserves anymore as of 2016. You can blame a predecessor. You weren't there. So do you wish you still had the gold?
We
10
hold
seconds or less, please.
We hold our reserves in interest-bearing assets, high quality.
It would be worth a lot though today, though. Well, I mean, we're one of the only central banks that have zero reserves now.
Okay, thank you. That concludes this round. Mr. Sawatsky for 5 minutes, please.
Thank you, Chair, and thank you both for coming today. You've mentioned the importance of having diversified trade partners. I was wondering what are some steps that we could take to ensure that we do have more diverse trading partners?
That's another thing that I wanted people to do is start asking him more on a general basis because he doesn't want to be specific and seem partisan. But if you ask him in general, if this happened to any government, how would you? And he responds, he answers the question.
To find new markets, that sometimes requires them to shift their products, their services. Developing trade relationships takes some time. It takes some investment both from the government and from these companies. So, I mean, it's a little bit out of our wheelhouse, but I would say that the steps in general, again, the steps that the government is taking and that we see companies taking, when we talk to companies, they do tell us they're taking steps to diversify their trade partners, but as the governor said earlier, it takes some time and it takes some cost.
Mm-hmm.
So.
Thanks. It seems like there has been some progress in diversifying the trade partners, so I can agree that is important. So just touching on in attracting private investment into our country, do you have any perhaps suggestions on ways which we could foster investment into Canada?
I mean, a couple things. We've talked about regulatory approvals. Certainly, I spend a certain amount of time outside of the country in talking to global investors, and one thing you hear a lot is that people look at Canada and they see a lot of very good things, abundant natural resources, very well-educated workforce, rule of law, a diverse workforce, high labor force participation rates. But one of the things we do hear repeatedly is regulatory approvals there are too many levels and it takes too long. And I can't afford to tie up my capital waiting for an uncertain outcome. I think the more we can do, as the senior deputy governor said, look, those regulations, they're there for good reasons, but the more we can harmonize across provinces, get the federal government, the provincial government working better together, reduce the uncertainty, speed those up, that will make us more attractive to foreign capital. I think some of the other things we've talked about, we need to be able to get our resources to markets. That's transportation, it's pipelines, it's ports. Foreign investment will come if they see the return, and so we've got to look at investments that will make that more attractive. We need to make Canada more investable. That's what's going to attract more investment.
Thank you. Another thing I wanted to touch on, we're seeing a lot of investment into artificial intelligence and tech companies lately. And some people are concerned about like an AI bubble. Do you see any risks of AI-related investments could become overheated? And what would that mean for the broader economy if valuations start to fall?
Yeah, I mean, we talked about this. We had this question at our last press conference. I think there's lots of people that are concerned right now. There's pretty diverse views on whether there's an AI bubble or not. I mean, ultimately, if there was a sharp turnaround in the valuation of AI companies and you saw the stock prices of these companies fall, that can have a sort of confidence effect on spending, on investment. It can have what we call a wealth effect. People feel like if their investments have declined in value, then they don't feel as prepared to spend money. So a sharp drop in any asset group can have that effect. But the amount and the speed of the investment in the AI sector right now is, I think, what's causing the discussion around whether or not there's a bubble.
Thank you. My next question is maybe seeing if we can translate this to Canadians who might be watching and thinking about inflation rates and interest rates, and how would inflation and interest have an impact on somebody who might be maybe younger and not have many assets versus somebody who might be perhaps an older generation owning a home and etc.
Yeah, well, I think as the governor said earlier, we talk a lot about getting inflation back to 2%, and I think probably it can feel frustrating to people who say, well, inflation might be back at 2%, but I still feel like everything costs more. And certainly I think for young people who are trying to get a start in life, that cost of living, anybody who has to spend a good portion of their income on the necessities, like groceries, like rent, those things have increased a lot. So I think young people who have those costs, also, they're less likely to have assets that are earning a return. So if interest rates go up a little bit...
Thank you, Deputy Governor. We're going to have to end it there. Thank you, Mr. Sawatsky. Monsieur Garon pour 2 minutes et demie, s'il vous plaît.
Mr. Garon, 2.5 minutes. Or 5 minutes. No, 2.5 minutes. I'll take the 5. Madam Chair, I'd be happy with that. You've talked about the importance of investment, capital investment by businesses and by the government as well. Now, to go back to the budget that was tabled yesterday, as an economist, in terms of national accounting, do you consider that security services for soccer, matches for FIFA, are they considered by the Bank of Canada as an investment? Yes or no? I'm going to take it one at a time. Well, we don't really look at that level of detail. Okay. For example, a program to identify possible investments in terms of national accounting, would that be considered an investment? Well, I'm not an accountant, but as I said, we look at a very macroeconomic level. We don't go into the details. So let's go for a macroeconomic one. So a tax credit offered by the government, is that considered as an investment? So the tax credit itself. The Deputy Governor is saying no as an answer, I think, with her head. In English, please.
As I understand the way the governors or the government's describing their budget, is they're trying to categorize things into whether they are...
Non, je comprends, mais je demande au sens de la comptabilité nationale.
I understand, but in terms of national accounting rules, is it under I or G? Well, Stat can. They're the ones who are going to decide on the national accounts. I understand that your LTs, we've got the same monies. Now, in your report, you say that when Trans Mountain is finished and up and running, there won't be many other investments in Canada. There will be a lack of investment in oil transport infrastructure. Does that mean that private investors, in particular foreign investors, won't be interested in doing this type of work themselves? Is it the government that has to choose to jump in, and it's the taxpayer that has to actually fund this type of investment? Well, that really is a decision for you as parliamentarians. I can say that the TMX expansion has had a macroeconomic effect in terms of the LNG terminal up in Newfoundland. So when they're open, they're big enough to be reflected in the national accounts. These are big projects that really do have a macroeconomic effect. Thank you very much.
For 5 minutes, please.
Well, thank you, Madam Chair, and welcome, Governor, Deputy Governor. You have a currency management program on, including buying foreign currencies at the bank. Right now you have about $71+ billion of U.S. currency on your balance sheet, and that's a record high. Is that correct?
It's roughly right. I don't have the actual number in front of me, but
and
yes,
in January,
so just to be clear, those assets in our exchange fund account, they belong to the government of Canada. We manage those on their behalf.
Good, thank you. And as managing them in January of 2025, you had $63 billion. So you've gone significantly up as far as your holdings of U.S. dollars. When you purchase U.S. dollars, what effect does it have on the Canadian dollar, U.S. dollar exchange rate?
It doesn't really have any effect. We run a match book, so the government typically issues a bond to match to fund the purchases of the U.S.
And yet,
so it doesn't really have any effect on the. To be honest, you have to realize the exchange market it's a vast, very liquid market. These transactions are not of a scale that would impact it.
So correlation, though, and I know correlation and causation are two different things, but every time the Bank of Canada reduces its holdings of U.S. dollars, the exchange rate changes and goes down. And this is just coincidental?
Our management of the exchange fund account we have not intervened in the foreign exchange markets since I believe 1998. Okay. So,
and yet,
these are funds that are held in the case of an emergency, but they have not been used.
But it's at a higher rate now, a higher level now than it has been in the past.
We've increased it kind of in line with the global economies have been growing. Our economy's been growing. It's been growing
10% over the last 9 months. Okay, so
that's a good thing. You want to have some emergency funds.
Thank you. The Steve Mirren, who was appointed to be on the Fed, he makes the statement that countries like Canada manipulate their exchange rates in order to keep the U.S. dollar down, in order to increase manufacturing in their home, and he calls it dollar manipulation. Would you say the Bank of Canada is involved in any kind of dollar manipulation?
Absolutely not. We have not intervened in our exchange market since 1998. We only intervened in 1998 because there was extreme pressure on our currency. We were stabilizing it. We believe in a free-floating exchange rate. Canada actually has been a model around the world for a long time. We're big believers in flexible exchange rates. We think they're broadly a stabilizer.
Okay. So right now, the Bank of Canada rate is 2.25%, and the Fed rate is 3.75 to 4%. How often is that differential in our history? How often is that differential that wide?
The differential is unusually wide at the moment, and that's because the performance of our economies is unusually wide at the moment.
You're saying the performance of our economy is quite subpar at this point?
It's certainly a lot weaker than the U.S. economy, yes.
Okay. And that has no effect, you think, on the actual exchange rate?
Yes, it has some. It certainly has some effect on the exchange rate. I don't think. I mean, the Canadian dollar actually has been pretty stable vis-a-vis the U.S. dollar. There's more than one thing going on. Yes. Look, Canadian rates below the U.S. rates will tend to weaken the Canadian dollar, and actually that's partly how monetary policy works. That's partly.
Thank you. Exactly.
That makes monetary policy more
stimulant. So the point I'm making is by having an interest rate.
It's not the dominant thing.
150 plus basis points below the U.S. We are actually creating less of a market for for buyers of Canadian debt to come into the Canadian market, but and let's accept that the U.S. market is the most liquid market. And so more buyers of debt would go to the U.S. market, correct?
I'm not sure I'm following. The way we think about it is.
So let me rephrase it then,
Mr. Governor. Let me
rephrase it then.
20 seconds left.
If we're 150 basis points plus behind the U.S. as far as our interest rates we're offering to bondholders, and the U.S. is a more attractive by security, do you think those bondholders would go elsewhere to the U.S.?
And that's partly reflected. The exchange rate adjusts to equalize that. Yes.
Thank you.
Thank you. We will continue with Mr. McDonald for 5 minutes.
Thank you, Chair. I recently met with representatives of credit unions from Atlantic Canada, and they had some concerns with different issues, but one that they brought up was with the increased consumer debt stress, do you feel that, is there anything that can be done to lessen the risk on the smaller financial institutions and the credit unions vis-a-vis the chartered banks, which are larger structures?
She used to be the supervisor of credit unions in British Columbia, so I think this is for...
Keyword being used to be. That was quite a long time ago. It's a little bit... my knowledge is a bit dated, but let me just say I think the problem with small financial institutions is there's a certain amount of scale and cost that goes into running a financial institution. It's technology, it's dealing with regulation, it's making sure that you've got the innovative products and services. Customers want branches and technology. So there's a high level of fixed cost, and I think that's really what's putting pressure on small financial institutions and small credit unions for sure.
So the processes they're going through by consolidating is probably going to help them long term.
Yes,
at least.
I mean I think that's been the answer over the last 15 or 20 years. Is the credit union system is gradually consolidated. Yeah.
Okay. And you spoke earlier about trade diversification and that it's not something that's controlled by the fiscal policy of Canada. But I did meet with different agricultural commodities over the last 2 weeks prior to the budget. A lot of them talking about the need for policies that are going to give us trade. We need to trade with all the countries we can diversify into. We don't just have to pivot from the United States and increase trade in Asia or China. We need a lot of markets for our agricultural commodities. Is there anything in the fiscal measures that the bank controls other than interest rates that would help in that area?
Back to the point we made earlier, the single biggest thing we can do to facilitate investment is to keep inflation under control.
Okay. And then getting back to Budget 2025 that was introduced yesterday, we've seen large investments in community infrastructure, in housing, and in industries. So a region like mine, Atlantic Canada, that has a seasonal economy, those types of investments coupled with a lower interest rate, how does that help the productivity in Atlantic Canada?
Well, I mean, it's a tough question. I think people want houses, and housing affordability is a big issue in this country. We've had a housing affordability problem at very low interest rates. We've had a housing affordability problem at high interest rates. So I don't think we're going to solve this with interest rates. We're going to solve, if you want houses to be more affordable, we need to build more houses and we need to lower the cost of building houses. And this isn't something that's going to get fixed quickly because, we've had a buildup over many years. It's going to take some time to get out of that hole. But I will say that we are pleased to see that governments at all levels, and it is very much at all levels, federal, provincial, and importantly municipal, they are working together better than they have in the past. And if these programs are going to work, you're going to have to see even more cooperation at all levels of government.
It's also, I'd say to add to that, I mean, it is hard to find a direct impact to housing, but employers need their employees to have houses where the jobs are. So having affordable housing in large cities like Vancouver and Toronto will help attract employees at a reasonable wage so that companies can find the workers they need to grow their business and stuff. So housing is a pretty important contributor to attracting and retaining employees.
And I think our government
identifies... You have
identifies...
about 10 seconds left, Mr. McKeon.
Oh, okay. I think our government identifies that if housing supply is increased, housing costs are going to come down. in the long term.
Great. Thank you very much, Mr. McDonald. We now have, je comprends, Monsieur Martel et Mr. Chambers.
So Mr. Martel and Mr. Chambers for the next 5 minutes. Thank you, Madam Chair. Now, this is interesting. We can see that we have a great deal of debt here in Canada. What concerns me is the fact that we need to create wealth and the fact that foreign investors are no longer coming to Canada. You've said that we have to improve infrastructure. We have to better transport corridors between the east and the west, better port infrastructure. But what can we do to attract them? You've talked about this. You've said foreign investors have to come to Canada. How can we attract them here if we don't change anything with their regulations? Because investors always say that it's too lengthy and that's why they look elsewhere. I agree with you. This is one factor. I've often heard that myself when I've talked with international investors. So yes, our reputation in Canada is that we have a regulatory system with the government, with the provinces. It's complicated. There's lots of uncertainties. So if we do want to have more foreign investment, I think we want to obtain this foreign investment, then it is important to improve this aspect. But even if we have harmonisation with provinces, if we don't change anything with the regulations, is this actually possible? Permitting and so on. There are good reasons for having regulations in place. But yes, I think this is an important question. Can we remove regulations that are not meeting a need anymore? Or often there's duplication, says Mr. Martel. Or can we have quicker reviews? These are things that need to be explored to improve foreign investment. If we look at the interprovincial obstacles, would this actually be favourable for investments between provinces? Because there would need to be political will. There needs to be leadership from the government. But when it comes to the municipalities and provinces, I don't know if they'd want to accept common regulations. So how are we going to get this? Seems that we're kind of maxed out, because if the money doesn't come in, how are we going to actually see any light at the end of this tunnel? When it comes to different regulations between provinces and trade barriers between provinces, the good news here is that recently we've seen lots of interaction between provinces on this very matter. There are several MOUs that have been signed between provinces, but to be frank, if the aim is to reduce costs for businesses, then it's important for provinces to take a more comprehensive global approach. Because have lots of different MOUs between different provinces, well, for businesses, they still have work to do to try and decide and determine what they can do and what they cannot do. So I'm rather concerned that they've made good progress, but they're not there yet. And I'm concerned that they're going to say that, yes, they've been successful, when actually there's still work to be done. I'm sharing my time, but sorry.
Funding, a lot of debt being borrowed. If the Canadian government runs into issues, yields spike up, or there's problem with funding, would you consider using quantitative easing as a tool again?
Quantitative easing is not a tool that you would use for something like that. Quantitative easing is a tool, first of all, you'd only use in extremely, we've only used it once in the history of the country, as you well know, during a 100-year pandemic. And it's really something you would use when you've got interest rates at zero. You feel that you need a lot more monetary policy.
If you were trying to keep interest rates down, though, and there was an issue with funding and interest rates were going up.
I mean, we have a whole series of tools we can use.
I'm glad to hear that you're very reticent to use quantitative easing again. Thank you, Governor. I appreciate
we have a series of tools.
Thank you very
cool,
much.
thank you, Chair.
Mr. Letao.
It's a 2-hour committee. You can give him an extra 30 seconds to answer the question.
Let's go back to inflation. That is the mandate of the Bank of Canada, to keep prices low and stable and predictable. I think the Bank of Canada has done an excellent job. Inflation has come down from 8-9% at some point, and in fact, if I'm not mistaken, maybe you could confirm this. The Bank of Canada was one of the first in the G7 to bring inflation back, because this was a worldwide phenomenon actually, to bring the inflation back within the range before other central banks.
Yes, inflation peaked at 8.1%. We were among the most aggressive in raising interest rates. In fact, we raised interest rates the fastest in the Bank of Canada's history, and it worked. It didn't work without some pain. Certainly, higher borrowing costs restrained spending, but frankly, that was what the economy needed. The economy was overheated. We did bring down inflation relatively quickly, and importantly, while we slowed the economy, we didn't cause a recession. We didn't cause a big increase in the unemployment rate. And as we, this time last year, I'll have to say, we were feeling pretty good. Inflation was back to 2%. We were lowering interest rates. The unemployment rate was starting to fall. Unfortunately, at the beginning of this year, a whole new threat developed.
That's right, and so the pressures on costs, on inflation has kind of shifted. And I actually read the monetary policy report. I'm one of those. And you have an interesting and intriguing chart on page 64, chart 36. Cost pressures on goods are easing. And perhaps if you, in general manner, could you address the issue that there are still some cost pressures, but they appear to be shifting. It's not the same situation now as it was back then. So could you perhaps elaborate a little bit on that, on what are the current issues that worry you most in terms of future inflation? We are now within the range. We want to keep it there. So what's the big problem?
Yeah, so you're looking at chart 36, which is this, it's a heat map. So we look at inflation through many different lenses. These heat maps are an efficient way of sort of combining a lot of information about where are the upward pressures on inflation and where are actually the downward pressures. And what you see in the heat map is energy prices have generally come down. So that's actually been they've been actually subtracting from inflation. As has already come up, food prices have gone up, so they're putting some upward pressure on inflation. I think that the main message is that we are seeing some evidence that the additional costs from U.S. tariffs, costs related to the reconfiguration of trade, they are having some impact on goods prices, because goods, of course, are what are largely getting traded. So far, those are reasonably contained, and we think going forward, inflation will be pretty close to our 2% target, and that was why we took the decision to provide some additional support to the economy.
So some of the pressure now on inflation and perhaps coming down the pipeline would be from import prices, from goods that we import, from inputs into our supply chain. In that respect, and perhaps not directly linked, but one issue that I think also has a big impact on inflation and on our ability to provide a predictable environment for businesses and consumers, for individuals, is the financial system, the stability of the financial system, but more importantly than that.
Thank you, Mr. Litau. That's your time.
That's it?
Yeah, you got just over 5 minutes, so thank you.
Okay, I'll be more concise next time on my questions, but thank you very much.
Okay, merci, Monsieur Litau. Monsieur Garon pour 2 minutes.
Thank you, Mr. Litau. Now, Mr. Garon.
Sur les matchs,
So to come back to the FIFA matches, no, joking aside. Well, I was struck by one of the lines in the section on the underlying inflation where you were showing that inflation had tailed off slightly. And under one of those points there, you say that the impact of the high costs of freight, and then you also talked about severe weather conditions. For this period that was under scrutiny, there were less impacts than in the previous period. So then I wondered about these extreme weather events and the warming of the planet. So could you perhaps explain to us what is the link between the frequency of these events over a given period when you're analysing the cost of production, productivity and underlying inflation? So technically speaking, could you tell me about the mechanics behind all of that? Well, what do we see throughout the world is that there are more of these extreme weather events, droughts, for example. Here in Canada, we've got the wildfires, the feux de forêt, and the wildfires, big wildfires. So these events do, of course, have an impact on prices. For example, with droughts, that has an impact on the prices of farm products, and that creates more fluctuations in prices, which then creates more inflation fluctuations as well. So we are wanting to observe the inflation trends. So we can't look at all of these short-term fluctuations. We can't control them, but we want to control the trends. We want to keep it around 2% and peg it there. So we have to do work on that. And all of these analyses of underlying inflation help us in that work. I guess I've just got a second or two left. So perhaps we'll still have some more time, but I'd just like to thank you once again, if needed. Yes, we'll have a bit more time later. That's nice of you. Now, Mr. Lefebvre for 5 minutes. Thank you, Madam Chair. First of all, apologise to the witnesses. Unfortunately, I was up in the House working on the budget. Now, Governor, earlier you were referring to economists, and you said that for economists, the most important point is to improve productivity, and for Canadians in general, it's cost of living that's the most important. You've said that's basically the same thing. Could you explain that and tease that out a bit more for our Francophone citizens? Yes, so is the answer. For Canadians, their main concern is cost of living. For economists, if you ask about their number one concern, they'll say productivity, but it's the same thing. Because you can buy more if we've got more income, and if we've got more productivity, this will create higher wages, which means you can have higher incomes. And when you've got more income, then life is more affordable. So when we talk about improving productivity in Canada and Quebec as well, we've been talking about this for a long time. We've been talking about wanting to improve productivity for quite some time. Answer. That's why we have this cost of living issue, because for a long time now we haven't had enough productivity. So according to which are the countries that are the high performance in terms of productivity? Well, our neighbour to the south has been very successful in improving productivity levels. Are there any other countries that you can cite other than the US? Well, to be frank, there are several other countries in the world that are more like Canada than the US. The US has been very successful in the UK, France, in the Eurozone. Their productivity performance is very comparable with ours here in Canada. And we've got many of the same problems: lack of investment, lack of big tech companies, lots of regulations. Do you think that artificial intelligence could bring in some answers to resolve this? I think yes, but what we've seen so far is that it's the US economy that's been the real winner, thanks to AI. Something that strikes me is that if we look at the science behind AI, we are, in fact, the leaders here in Canada. What's missing, as the Deputy Governor has said, is that we're not able to create companies out of this based on this innovation. I think the most important point here in Canada is that many companies need to see how they can increase their productivity by using AI. The sector that we know best is, of course, the banking sector, the finance sector, and they've spent a great deal on AI. And what we've observed is that it starts with things like improving customer service, or looking into regulatory compliance matters. I think it will be used to increase revenue or have personalized, custom-made products. I think that's an opportunity there. Of course, there's an inherent risk. It could increase the risk of financial instability with a higher concentration in the hands of certain companies, or if everyone uses the same thing and everybody wants to do the same trade at the same point in time, there are certain risks there. So we need to manage these risks and optimize the benefits. I'd also like to hear about the comparison of our economic growth with our G7 partners. During the election, the Prime Minister repeated several times that the Liberal government would build the economy with the quickest growing economy in the G7. So what is Canada's position when it comes to economic growth compared to other partners in the G7? Our growth is comparable with most of the G7 countries. It's less than the US. Thank you, Mr. Lefebvre.
Okay, great. So last time I got cut off, I'm going to continue on the same path on productivity, but I want to ask a series of short answer questions and see if I can just get you to say yes or no. I know it's always challenging when politicians do this, but I'm doing it in good faith. I'm not trying to wedge you or anything. Just want to ask you, so from a productivity enhancement perspective in Canada, generally speaking, would a more competitive marginal effective tax rate increase productivity or tend to increase investment?
Yes.
Okay. And would greater in tax incentives for investing in machinery and equipment generally increase productivity and investment?
If they attract investment.
Right. So what about R&D tax incentives?
Again, if they generate more R&D, then they'll be effective.
What about investment tax credits for clean technology?
Look, I think
I'm just
I think we
asking.
get the picture. Look,
Yeah.
I mean, what I would say is, look, I think we all know the answer to these questions. You know, I think the issue for you is, you know, these things have got to be done in a smart way. They've got to be done so that they're effective. Their effective use of tax dollars. That they're done in a way that maximizes the productivity benefit, and that they can work in scale to have a macro impact.
Yeah,
on a
great.
timely basis. I mean,
So
that's what
show-
you need to focus on. I think we know the answer to. These things are pointing in the right direction, but it's going to come down to execution.
Good. So appreciate that. AI adoption, someone else asked you about that. AI adoption certainly, I think, has productivity gain potential at the very least. Incentivizing that through investments and helping our small businesses and all size businesses to actually start to look at how they can adopt that obviously would have some productivity gain potential as well.
Yes.
Right? Okay. And then open banking. So the budget finally says we're moving forward with open banking. Obviously, you mentioned competition before as being important for productivity gains as well. Can you speak to how the open banking framework would increase productivity in the financial services industry?
Well, you basically named it. Open banking is designed to improve competition. So that's the channel through which we would expect it to improve productivity. And banking is a network sector. It's a sector that affects the productivity of other sectors. So if we can get banking to be more productive, more competitive, it should have spillover effects to the broader economy.
And from a fiscal anchor perspective, our budget has moved to a debt to GDP, a deficit to GDP ratio. Would you say that's fairly normal as a fiscal anchor for other G7 countries?
I actually haven't gone through the fiscal anchors in the budget in any detail. I mean, I think fiscal anchors are a good thing. If they're going to be credible, you got to stick to them over time. That's what I would say.
Great. And the capital budgeting framework, generally speaking, the government's focus on capital formation is certainly going to stimulate growth and productivity as well, or at least make that.
If it's done smartly.
Okay. So it's all about being smart and execution, like excellence, I guess. Execution excellence. Okay, great.
And I'm not being. It's going to be hard. These are big things. It's going to take smart execution. It's going to be a lot of work.
Agreed. Yeah, and I think we're up for that work. So thank you very much.
Thank you, Mr. Turnbull. Since there was a little bit of time left there, I'm going to use the chair's prerogative just to ask a follow-up question on Mr. Lefebvre's question on productivity. You mentioned that the U.S. is really the country that has achieved greater productivity, and Canada and peer countries are lagging behind. Could you just briefly comment on what those differences are
In productivity growth?
between Canada and the U.S.?
Well, I mean, in any one year, I don't have the whole time series in front of me, but certainly, I mean, U.S. productivity growth. So if you go back in time, so both Canada and the United States had a pretty good pickup in productivity growth in the second half of the 1990s, and the difference really is that in Canada it kind of petered out in the early 2000s, and it's been pretty weak ever since. In the U.S., it just kept going, and when in any one year, that doesn't make a huge difference. But when you accumulate a significant difference in productivity growth each year over 20 years, you get the kinds of numbers I think Mr. Hallahan mentioned at the beginning, where, the income, the average income in the United States is well above the average income in Canada, and that is productivity growth.
Great. Thank you very much for that. We will continue with Mr. Hallan for 5 minutes. Thank you.
Governor, today we see young Canadians, and we talk to a lot of them. They're losing a lot of hope. Mr. Rogers had mentioned about like owning a home for someone young, unless they have the bank of mom and dad, is basically impossible. A lot of people say they've given up on the dream of home ownership. Some people, I remember the days when 25 years you could pay off the mortgage Now sometimes it takes that long to save up for a down payment for young people. And Governor, you talked about that it's not just about lowering the interest rate, it's about the cost of a home and the supply itself. And I think those also they go hand in hand, and we see with the government's own housing agency is saying that housing starts are going down this year, and they're going to be worse next year. And for young people, I think like it's almost impossible for them to get by, let alone what we're seeing with food price inflation as well. My question is that we see that in this new budget, there's an industrial carbon tax that's going to increase. Are those some of the inputs from that? Because it goes into the steel that goes into a home, it goes into the concrete that goes into a home, and it increases the costs. Would you say that as this industrial carbon tax increases, it
slows down productivity,
the cost of a house?
Or a house, yes. And
I
building
don't
of houses.
think we have any work on that. I mean, the industrial carbon tax is largely, so it's imposed on very large emitters, and most of what they're producing is exported. So it's not having much of an impact on prices here in Canada. I don't have, I mean, our view is it's small. I don't have an estimate. You'd have to get very detailed, almost industry level data to chart through, because it's very indirect. But it's very different than the consumer carbon tax, which is applied directly to consumer goods. I mean, that has been removed. We saw the impact that had. It dropped prices, the price level by 0.6. It's taken 0.6 off inflation for 1 year.
Okay.
The industrial carbon tax is very different. It's a small number of large emitters, and most of what they produce is exported.
Right. But with regards to, let's go back to housing, with regards to that, like what would it take for young Canadians to have hope again in order to even get a house?
If you want to focus on housing, I don't think the place to start would be the industrial carbon tax.
Well, I mean,
I think it would be municipal development charges.
Right.
It would be, we've talked a lot about productivity. The productivity in building a house has been going steadily down. The time to completion of housing, the graph looks like that. There hasn't been a lot of change in how a house is built. We need to look at things like new modular construction. We've got to look at ways of, we need a lot of houses. How are we going to build those efficiently?
I can tell you how to do it
quickly, get the cost down, and make them more affordable. That's what's going to make housing more affordable.
Right, but for most young Canadians, I don't think we hear a lot about the modular and those. I don't think a lot of young people want to be stuck in container houses. People want to start families.
Look, I'm no expert on this, but I did go look at a plant, like a plant that is making these. They're not trailer homes. They're pretty nice houses.
Yeah,
I mean, yes, they're going to look similar.
That's not modular.
But, if you want to build
if
you want to build a whole new community rapidly,
he's conflating the two.
They're not going to be for everybody, but I think there'd be a lot of people pretty happy to have one.
Yeah, and obviously, like with what you said, with the supply needs to go up in order for us to have more affordability. But I think that it still is a big barrier for young Canadians who can't save up for even a down payment on a house. I mean, most people can't even imagine leaving their parents' basements today.
I wish I
they're
was here
doing all the
asking
right things. They're going through school. They're trying to work as hard as they can. Youth unemployment. I believe the youth employment rate is one of the lowest it's been, and I believe it was 25 years or something like that. Maybe what I'm trying to say is that you talk to a lot of Canadians. You guys do a lot of research with young Canadians and other people. What is it going to take for this situation to change, for people to be able to afford things in Canada again?
Well, maybe the senior deputy governor can add, but look, I'll just say, look, I share all those concerns. I think they're real. Employment growth is weak right now. That particularly affects youth, because they're the ones that are coming into the labor market. If you have a job, there haven't been a lot of layoffs except in certain sectors, but hiring is weak. So it's taking young people coming into the labor market longer to find a job. That's not helping. I don't know, do you want to
No, sorry, we'll have to cut it off there.
Okay.
We're out of time for this round. Thank you. Thank you, Mr. Halan. Mr. Sawatsky for 5 minutes.
Okay, just because it's a liberal round, I want to give my 2 cents in. You guys know I really never do this, but as somebody who spent years as a framer building homes, I was in renovations, I went and got my HVAC license, I installed furnaces. I've been around housing development for probably 6 or 7 years before I went and got a degree in business and studied economics. And this is why I'd love to ask him some questions, because on the carbon tax issue, he was saying, oh, I wouldn't want to start on the industrial carbon tax. If you want to start, there's other things. Yeah, but that's deflating from the fact that it actually does cause a stagnant in productivity. And if your whole idea is that you want to increase productivity, particularly, let's just say in the housing sector, why would that not be a good measure, is to remove that to decrease costs for builders? And then also another thing that he's conflating is modular versus prefab. What he went and saw was a prefab factory where they prefabricate a lot of the floors, the walls, you're talking trusses, things like that, and it's all just kind of put together on site like Lego. It's still the same building materials. It's still wood. It's still drywall. It's still siding and stuff on the outside. But the modular homes are specifically secans and other small means of already developed walls and floors and things like that. It's not your typical wood house. It's literally secans all stacked together. And there's other versions of modular housing, but that's the whole point in modular, is that most of it's all just shipped out on site, and the only thing you have to do is run wires and some insulation and stuff through it. And make it winterized, right? That's the difference between modular and prefab. And his whole idea of, oh, we need to build homes faster. Okay, a good start is the carbon tax, man. Does it have a basement? No, it's built right on the main level. So you have no basement. You're lucky if you get a 2-story. It's usually just a bungalow built straight on the main. There's no basement. Anyway, I'll get back to this because I could yap on this for another 10 minutes. I don't want to take away from the committee.
In the past, we've thought of technology as replacing what are known as blue-collar jobs. But this is really, AI is really targeted at more mid-sector, more analytical type jobs.
Thank you. So taking a bit of a turn here. So I'm wondering about the stability of our economy. Of course, we've had major disruptions. Are there ways in which we can make things more stable so that investors are more likely to invest into large projects?
Maybe I'll take that. I mean, look, we haven't talked a lot about monetary policy. I mean, what can we do in monetary policy? I mean, we can keep inflation low and stable, and price stability. It creates the conditions so that households, businesses don't need to worry about inflation. That's what we can do, and as I said, as long as we're doing a good job controlling inflation, we can provide some help to the economy to adjust to this big structural transition. But getting back to the senior deputy's break the glass speech, productivity is what's going to add to resilience.
And how can we coordinate with the monetary policy and the fiscal policy in a better way to ensure that?
Well, look, I mean, we're all working for Canadians, but we have our own mandates. We have a very clear mandate for monetary policy. It's to keep inflation close to 2%, and we conduct that free of political interference. We look at the evidence, we make our best judgments, and we take our decisions. And what you see over history is that central banks with operational independence do a much better job at delivering on that mandate. Countries where they don't have independent central banks, it ends badly. They get into inflation problems. So, that's what we could do. Independence of monetary policy it's a big thing. We're not elected, and so it has to be a very specific delegation. So we think that independence is very important, But it also means that we don't tell governments what to do on taxes or on fiscal policy, and so we stay in our lane because the independence is very important, but it only applies to our monetary policy mandate.
Great, thank you. Thank you, Mr. Sawatsky. On va continuer avec Monsieur Garand pour 2 minutes et 10 minutes, s'il vous plaît.
We'll continue with Mr. Garand for 2.5 minutes. Thank you, Madam Chair. I've got a more light-hearted question to put now. Since the new Prime Minister arrived under the last government, he comes out with the G7 every few minutes. We have to have the biggest growth. We have to have the best investment in G7. Mr. Champagne talks about G7 every second, not even every minute. Now, Canada's quite a small economy. It's a very open one. Is the G7 a good comparable when we're talking about our productivity performance, our investment performance, our growth performance? Because we went in the G7 because the US wanted us in there. They wanted us there as a friend, not because we had a big economy. So is it a good comparable for us to use the G7 or to see if we are really at the head of the pack? Well, the countries with which we want to compare ourselves the most are often the biggest ones, the closest ones. So that's why often we compare ourselves with the US. As I've already said, now and again, it's not the best comparable economy for us. We are more comparable with the UK or France, Italy, Germany. There's other countries as well, such as Australia, Sweden. These are economies that are a bit smaller. I think it's important to look at several comparable countries, but the G7, yes, we are members of the G7. Now I'm going to ask an add-up question. I'm second level opposition, so I don't have much time. So when we talk about the G7, we've got the US. We know about the GDP debt ratio, which is considerable. The UK is in a slowdown. France can't even adopt a budget. Perhaps I'm pushing it a bit, but France has got the difficulties that we all know about. There's low growth in Japan for quite some time now. So perhaps we're comparing ourselves with the worst, apart from the US. Because basically it's just Germany that's doing well. I agree that the G7 is not the only countries with which we should compare ourselves. But at the same time,
we're running low on time. Just taking note, we have 2 left on our speakers list. We have about 8 minutes. Is it the will of the committee to give each of you 5 and go a bit over, or to give each of you in 4 and end? 4 is fine. All right, let's do that. All right, so Mr. McLean for 4 minutes. There you go.
Well, thank you. I'll go on a different approach here. Your balance sheet is still from post-pandemic times. You've still got about 175 billion, 176 billion of Government of Canada bonds on your balance sheet, but it looks like it's going up. Like your balance sheet does seem like it's increasing lately. And your losses continue on a yearly basis. Your negative equity about 9.9 billion now, and you've lost $9 billion only on the transactions. If you mark that to market, how much are the actual book losses that we have on the Bank of Canada balance sheet?
Great question. This is one I wanted to ask.
I don't have that number. We can.
So 9.9 billion is your negative equity at this point in time.
Yes.
Okay.
Yeah.
So that's.
But just to come back to other points you made. We are not in a loss position anymore. So we are at positive earnings as of about a month ago, and we'll end this year in a positive position. So we're starting to contribute back to that equity. I don't think it's correct to say that our balance sheet is increasing. It's still declining. We have said that we would get to a level that we would stay at probably sometime around that later this year of reserve balances. I don't know if you're looking in total at the balance sheet or in particular at reserve balances, but But either way, I don't think
I was
our
looking at your
balance
holdings
sheet's
of Canadian government bonds.
I mean, the big
fluctuates
picture
a
is
bit.
we've been shrinking our balance sheet for
I see
the
that.
last few years.
I see that.
We've now got it back to about the steady state where it needs to be. And so, we are now transitioning back to our normal operating procedure.
Okay.
So 9.9 billion will be a loss that will appear on the government's corporate crown
we're
corporations.
ultimately consolidated with the government, as the Senior Deputy Governor said.
Okay.
We're beginning, our revenue now is bigger than our expenses, so we are starting to contribute to building that back up.
So revenue bigger than expenses means that your
Running a surplus.
investments are earning more interest than you're paying.
Yeah, we obviously have some expenses to run the Bank of Canada.
Okay. The question some people would have is if your debt management strategy of keeping interest rates low has an effect on your losses in that respect, and if that weighs on your decision somewhat, in addition to the other issues.
We don't run monetary policy to maximize the profitability of the Bank of Canada. We run monetary policy to keep inflation close to 2%.
And inflation would include some of the losses, some of the heavy debts that the government is incurring on Canadians.
Inflation is the year-over-year change in the consumer price index.
I understand what the inflation is, but would you say that annual deficits and mounting debts contribute to inflation?
Well, I'm not sure I really understand the question. I mean, inflation's 2.4%.
Do annual deficits and mounting debts contribute to inflation?
Depends on the situation the economy's in.
Okay, thank you.
If the economy's overheated and the government runs a big deficit, yes, it's going to.
Is the economy overheated?
No, economy's weak.
Thank you. I'll let that go. Thank you very much.
Thank you, Mr. McLean. Mr. Turnbull for.
So I'm going to give my time to Mr. Swatsky, but just before I do, I just want to say thank you again for appearing. Appreciate your ability to answer our questions, and look forward to seeing your future reports that I know will account for many of the fiscal policies and measures that are in the federal budget. So I look forward to having you back sometime in the future. I'll hand it over to Mr. Swatsky for a couple of questions.
Thank you, MP Turnbull. If you were to give advice to a young Canadian who's looking to save in the current job market, is there any advice you could give to somebody who's looking at the long term, maybe wants to buy a house down the line?
I'm going to come back to the previous answer to Mr. Hallen, and he was asking how, what are the things we need to do to make housing affordable for young people. I think it's really important that we focus on supply. What has worried us over recent years is trying to solve that problem by making it easier for young people to borrow larger and larger amounts of money. So messing with mortgage rules or that sort of thing. That worries us. I mean, over the long run, that's going to saddle you with debt, and that'll mean you have less money to spend on other things, and in general, that's not good for the economy if we have a lot of people who are saddled with a lot of debt. It can make you more vulnerable to economic shocks. So just as our country is more vulnerable when we have a lot of debt, so is a household more vulnerable when we have a lot of debt. So it's really important, I think, when we think about how to help young people get ahead, is that we're looking for ways to raise their incomes and to make housing affordable by increasing supply, but not finding ways to get you into more debt.
Thank you. And on a similar note, perhaps let's consider the case of a business owner who has assets but also high expenses, paying salaries. Given the current market, is there anything that you would advise for kind of in general a business owner to consider financially?
I mean, I think we don't really give advice to business owners. I mean, our job is really to help a business owner by keeping inflation low and stable. Mm-hmm. And when we can do that, they can make the best business decisions they can. Yeah.
Right. Thank you. Yeah. And just given the current outlook, I know we've talked a lot about a lot of things that maybe might not be a bit of a tangent, I guess. But is there anything in general that we haven't touched on that you think would be good for people to know?
You know, I think the thing that we would want Canadians to know is something that the governor said at the very beginning, is we know that the cost of living is tough out there right now. We know that. We've got inflation back to 2%, and that's really important. It's really important that we keep costs from going up again the way they did over the past 2 years, because it has that lasting effect. So as much as it's important that we have inflation back close to our target and we keep it there, that doesn't negate the fact that people are facing a higher cost of living out there. And we wouldn't want Canadians to think that by repeating the fact that we have inflation at target and we want to keep it there, that it dismisses the fact that they're experiencing a higher cost of living.
Thank you very much. And again, really appreciate your time. Thanks.
Wonderful. Okay, well, on behalf of the committee, I would like to thank our witnesses today. Thank you to the Senior Deputy Governor as well as the Governor of the Bank of Canada. We really appreciate your time and sharing your thoughts and insights with us. If it is the will of the committee, we will adjourn. Okay, thank you.
Okay, before we go, me and Chris were talking in chat earlier. We've got Seku at 11 a.m. tomorrow, Eastern Standard Time. We've got Gary in for 2 hours because he's talking on 2 different bills. Then we've got question period at 2 p.m. and then at is it 3:30? I believe we've got OGO. So we've got 2 committees tomorrow and question period. Got 3 streams. But just before we go, I wanted to mention one thing on MP Halon's line of questioning. He was kind of hitting the head of the nail on the head. I always flip that thing backwards, but he was mentioning how the industrial carbon tax is reducing productivity, and I would have liked a more generalized question on that, because when he was asking it specific, you could see that Tiff was kind of avoiding the question. He was like, "Oh, we don't comment on specificities of fiscal policy, because our job is to just basically worry about monetary policy." But he is an economic expert. He is somebody who understands economics in general. It would be nice to just get his opinion on that, but that's fine. Anyway, like I say, Gary tomorrow. Gary the Tamil hamster. I like that one. We will see him tomorrow at 11 a.m. And thanks everybody for tuning in and watching. I will see you guys tomorrow. Have a great rest of your evening. And cheers, guys.